Hey everyone, welcome back to another market closing live stream. Oh my gosh, what a flippin' floppy flop of a day. It's up 1 minute, then it's down. It's been nuts. I'll tell you, pre-market was exciting. I like pre-market. I wish pre-market was just how the day went, but no. The market had to go down, and now it wants to go up again. This is the most dysfunctional market ever, with the exception of end phase. That one's just going straight down. All right, folks. Let's see what the heck is going on in the sticks. Let's try to figure out what the heck is going on in the world. We know that AstraZeneca just had their vaccine distribution, or actually manufacturing facility in Baltimore, shut down. I guess the United States does not want that AstraZeneca vaccine. But then again, who'd you blame people? Talk about blood clotting from the AstraZeneca vaccine. Nobody wants blood clotting. I don't want blood clots. Just give me the Pfizer or Moderna one. Like if you're gonna take one. Jeez, take the one that's like 90 to 95% effective, not the 70% effective one that might give you blood clots. It's just, I mean, like, honestly, it would suck to work for AstraZeneca because it's like, oh man, like we put so much work in this. Well, sorry, it didn't do as well. Anyway, so where the heck are we? Oh, the Netherlands stopped AstraZeneca as well. I think they're dead in the water. I think they are bigly dead. All right, so what do we got? Look at the losers here today. Gevo being down 9%, but still at $9 actually isn't that bad. I feel like a lot of people who got into Gevo got in at like, $5, $6, $7. I was looking at it at $5. And I'm like, I don't know. I don't have that high conviction. I got to have that conviction. Like with Canoe. Canoe's at $8.37. I mean, this thing went down to like $8 today. I am very, very close to throwing more money into Canoe. I'm just going through the rest of their earnings call transcript. I actually listened to the call and have the transcript up at the same time. It's a little easier for me that way, so that I can listen along to what they're saying and I don't miss words and I can highlight and note and stuff like that. But anyway, I mean, I like what I'm hearing. There are these lawsuits now over, they misled investors. I'm like, you guys are just lame old short sellers trying to make a quick buck. It's ridiculous. So I'm so far still enthused by Canoe. We'll see how the rest of my research here goes. Enphase, the fact that Enphase is down 8% makes zero sense. I mean, this thing was like at $170 a share this morning in pre-market, and now it's $149. Like what? Oh my gosh, it's just like the most emotional market ever. But creates buying opportunities. And personally, I'd rather my favorite companies just be cheap for a while because I have more time to buy them. More time to make money. More time to invest at lower prices. Google, okay, whatever. I saw another headline come through. All right, so Plug Power down 5%. Plug Power is just getting beat to crap too. Plug Power, though, very much, in my opinion, a 2030s play, whereas Enphase is a now play. And so I think you get that nice discount on Enphase right now. Somebody here in the chat, Canoe has so much potential. They really do. Canoe is, they've got a really cool model. Really support that company. So we'll see. They still got to develop. They're like you got to think about them as like a baby Lucid, though. Lucid, CCIV, the merger there. They've already got a factory that could do up to 30,000 vehicles. Canoe's got like 30 beta cars, and no factory that could do 30,000 cars. They got a little puzzle factory. You can puzzle together 30 cars in 2 years. So you got to consider the stages of where they sit. Anyway, like why Matterport is selling off makes no sense to me. The cool thing about this, though, is, again, buying up. Because think about like Matterport is such a great freaking company. Why is it down 4%? Makes no sense at all. No sense. It's a stupid market. The market just doesn't know what it wants. I posted earlier. I don't even remember how. I hope that video did okay. I hope you guys liked it. Did you like the video, the one that I did on the hedge fund update? Did I put the right title on it? The hedge fund double Uno reverse hurting the stock market. Yeah. Okay. It seems like the like ratio is decent on that. I haven't looked yet. I've been too busy making other stuff. But yeah, I mean, like to me, that's I think exactly what's happening here. This is just hedge fund deleveraging and confusion. They're like broken in the head or something. I don't know. But there's no rhyme or reason here for some of these sell-offs. I mean, MP Materials crushes earnings, crushes it, a week and a half ago. Nope, got to sell it off. okay, whatever. Simon Property Group's down as well. How are we doing on the up? Look at AMC. AMC, let's sort the other way. AMC kicking butt, 14.6%. And you got that headset manufacturer, Vuzi, up 12.6%. You know what's crazy is I think it was Thursday or Wednesday. It might have been Wednesday. But anyway, we did a detailed analysis on Vuzi in the stock group, because what we do usually, not every morning, but usually every morning, is we'll pick like one company and we kind of do a deep dive and then we probe for other questions and things. Vuzi was one that we were looking at in detail on Thursday. I personally didn't have enough enthusiasm yet for the headsets to dive in, although I know a lot of people who were watching did. And the things, because we were going through the fundamentals and the earnings and things like that and the potential. And the thing's up like 12% now. So congratulations to those of you who did buy it. But yeah, I mean, it's definitely intriguing to me, these virtual reality glasses for all these different fields. Honestly, I mean, I didn't even think about this, but if we get to the point where we could do virtual reality in the medical field, it's like, oh, open heart surgery. And then it could just like overlay blood clot here. Like, I don't know. I'm not a doctor, but I can only imagine what computers could put in front of our eyes for us. I mean, then you may as well just have robots do it. Like, why do we need humans anyway? Well, I guess, I don't know. Compassion, empathy. What do I know? BlackBerry's up today. Yay. Look at a Norwegian up too. The cruise line's doing well. Cruise lines, and now it looks like the movie theaters too. HelloFresh back to 80, that German. I have to say, I like HelloFresh. Like, actually, HelloFresh isn't frozen. It just comes on ice. So you get fresh food on ice. So compared to, and I'm trying to bag on this here. I'm going to say it. Compared to Tattooed Chef is easy. You throw it in the microwave, it's freezer food, it's done. You want like healthy, gourmet, high quality food? Oh, if you have the effort to do it. I mean, none of the stuff takes 5 minutes like they say it'll take. They're like, oh, this recipe will take 5 minutes, takes 15. This recipe will take 10 minutes, takes 30. Classic. But the stuff's really good. I don't know, we're making maybe like 1 or 2 of these a week. But yeah, I don't invest in the company, but it's certainly trying out the product. It's been great. Anyway, Roblox, $71, finally over that IPO pricing, but it keeps rubber banding back down to like 66. I don't get it. Let's pray. They're talking about Tesla. You can't talk about Tesla without me hearing about it.
Well over 800,000 for all of 2021. By the way,
yes, the HelloFresh is very healthy.
Census is about 831,000 vehicles. Today, a couple of things happened after reporting these delivery numbers. First of all, Wedbush moved the company to an outperform rating, saying, look, this is a taste of what's to come here. And then you also had JP Morgan and Deutsche Bank raising their first quarter and full year estimates when it comes to Tesla on the back of these delivery numbers. Speaking of Wall Street firms and EV expectations, Wells Fargo initiating coverage today on GM and Ford. Take a look at these stocks, moving higher today by 4% and 5% respectively. I'm not going to go into a lot of details, but they like that Ford is turning around the company, focusing on EVs, and they like the way that GM is positioning itself with EVs. And speaking of GM, take a look at what they showed over the weekend. This is the Hummer EV SUV. Now, you might be saying, wait a second, didn't they already show us the Hummer? That was an SUT, had a short bed in the back. Basically, think about a pickup truck. This is going to be an all-electric SUV. First edition starts at $110,000, guys. The delivery start in 2023, but GM continuing to push the message that it will have a wide range of EV vehicles.
Oh, that's cool. The convertible style of it?
Ford too, right? I mean, Ford's not sitting idle.
Oh, yeah.
Buy too. I mean, I've been in the new EV Mustang.
Oh, that actually looked pretty cool. Let's pull that up for a second here. Hummer EV. The Hummer EV SUV. No way. I have what do I have? I think I probably got like 80 to 90K invested in GM. It's the only legacy automaker that I'm actually invested in. Not because I really like GM. It's mostly just for the cruise aspect of their company. But where's that convertible part? That looked cool. Oh, wow. I mean, you have to say, this this is exciting. Like all these new products and stuff coming out. The price is a little ridiculous, but then again, you know, it's the whole like Hummer thing. But wow, it looks very spacious too. Oh, 5 seats here. Anywho, I'm getting distracted. Everybody's doing the big monitor now too. Yeah. Anyway, that's interesting. Yeah, and Tesla's upgrades. I mean, Tesla, despite today being so crazy, Tesla's still kind of. I mean, you know, it's had a ride today, but it's still bouncing around that 5% up today. Red candlesticking right now. But hey, gosh, like you know, what did we say last week? Like, hey, give us 2, 3, 4, 5%. Fine. It beats 10% and then a big crash. So it certainly helps with the psyche that way, at least. Voyager Digital at $29. See, guys, yeah, Voyager Digital is one of those where like it's gotten to the point now where it's just so expensive. I can't. I don't know. I can't buy that one anymore. It's getting a little pricey here. So while I'm an electrician, I could walk you through a panel upgrade with a VR headset. I wanted to highlight that. I thought that was really cool. It's true. It's like, hey, make sure you tighten the screws all the way down. Yeah, I think that's awesome. I wonder how many of those a 3-battery Cybertruck can tow uphill. You mean the tri-motor Cybertruck? That's a good one. Yeah, let's see here. Government motors, really, Kevin? Fair. Hey, look. Okay, in fairness, 80K is like what 0.3% or whatever of the portfolio. So don't bag on me so hardcore. Okay, I put a little bit in. Oftentimes too, I do that, and it sounds crazy, I know, but I put these like smaller like slivers of percents into stocks as a way to keep up with the competition, so to speak. Like I really want to buy. Look, I want the next Cybertruck. I want the next Tesla. Don't get me wrong, but I think I need to buy the Lucid as you know, business development. No, obviously, I mean, it's another car. It'd be a car, but you know, I think there's no better way to understand a company than to own the product. So, continuing these little red candles here on Tesla, whatever. It's just I'm over it. I'm over it. The market's gonna do what it's gonna do, and it's been very, very emotional here lately. Bumble's up 4%. Okay, and Delta Airlines. Oh, there was some good news about Southwest. Love. I think they where are they? LUV. Where are they? Where the heck is it? Oh, there it is. Okay, yeah, up 2.9%. Yeah, they called a bunch of pilots back to work, which was great for the travel industry. Just sort of a little nod to recovery. Okay, Palantir's positive all of a sudden. What's that? I feel like there's a moment we went negative on the day. Probably over here we went negative on the day. It's just been such a bizarro day. That's all I could say. Bizarro. That's it. Call Bizarro. Norwegian, HelloFresh, Rite Aid. All the pharmacies are doing well. 5% on Tesla again. Planet's up. We got G-Tech at 66 cents. Delta. I never bought G-Tech. I really liked my talk with the CEO. It's that whole Canadian cannabis market. So interesting how they have to like sell their product to the government and the government has to resell it. All right, whatever. So what's this question here? Somebody says something bad about CCIV. What? Why is CCIV being a weenie baby? We need to, okay. It's an opportunity for you to buy more. Same thing with Enphase. No, who knows? Who knows? It's just, I think there's still SPAC pain, like SPAC shock. But these are such great companies over here. Like just because they're red, they're not bad companies. Like Matterport, EXPI, Enphase, Etsy. Man, I want to buy more, but I gotta be patient for like another week or two. I'll probably end up buying anyway. We'll see. CCIV 2.5%. Yeah, 2.25%. Yeah, 2.5% right here with XPeng. And the Chargers too. The Chargers were like up 8% today. And then what happened? Gone. Poof, just gone. It's very bizarre. Let's listen into what the mainstream media is saying.
Keep itself supported. It's actually kind of low-key defensive because you have mega cap tech leading the way and high beta stocks are taking the back seat. That could just be the market's way of letting the overheated areas cool off. But right now, that's what I'm focused on as we do kind of lunge for new highs at the open this morning and then kind of couldn't build on it.
Nancy, do we get away from the either or environment that we've been in with growth or value working to something where both work at the same time?
That's a great question, Scott. We have barbelled our portfolios to kind of take advantage of that by having some of the
barbell. Man, you know how many times we heard about the barbell like in May and June of last year? It makes sense, you know, because we've constantly had that rotation. The barbell has totally made sense. But I'll tell you, I think it makes like if in May and June you would have barbelled, you'd still be up more on tech if you were all tech, which is crazy to say because obviously now that's a little rough to think about. But look, it's all done well. Stock market overall has done very well, with the exception of the last coming up on 7 weeks now.
Big sell-off on the jobs report, on the services number, better economy, more inflation ahead, and that was hurting valuations. Why isn't that happening? Why do you think such a tepid response right now in bonds, which is also a green light for stocks, especially tech?
It's interesting, Sarah, as we got into April, there actually has been a little bit of a bid in treasuries. Some people have pointed to the fact that, you know, if you hedge out the currencies, global investors like Japanese investors actually can grab some good yield right now. Also, when you see things like the ISM services and manufacturing well above 60 at 35, 40-year highs or all-time highs, whatever they are, it's almost it doesn't really get much faster from here in the short term. So maybe we're seeing a little bit of a culmination of all these very aggressive economic.
Yeah, I think in other words, they're saying, hey, we're expecting those yields to maybe lid off, which is good. And that's very similar to what we talked about early this morning when I made a video at like 3 a.m., which I don't really understand why, but I did make a video at 3 a.m. Talking about specifically this, how Goldman Sachs sees maybe the bottom in bond prices, kind of calling the bottom there in bond prices, which would be calling the top in yields on the other hand. Palantir signed a 5-year deal with the National Nuclear Security Administration. That might be why it's bear traps everywhere, says someone. Record-setting number of weddings in Vegas this weekend, according to the owner of a chapel. Man, everything is like blowing up. Everything's record-setting these days. Like seriously, like you go to Costco and it's like this is record-setting. Like the amount of people spending money right now. It's gonna be interesting. Have some inflation implications. We'll see. All right, sorry, I saw another question here. Somebody had a question, but I lost it. So, oh well. Yep. Okay. So, all right, let's keep going here. I wanted to take a quick peek at the top news here. Let's see what we got in terms of top news. So, crude oil slumps, but tougher test is yet to come. Active managers are reveling in easiest stock market in a decade. Well, sure, active managers, with the exception of Kathy over at ARK, all they have to do is go half recovery, half tech, we're good. Yay, tech is doing good. Look, clients, we're doing great. Recovery's doing well. Look, clients, we bought a bunch of indebted companies. They're doing good too. Don't get me wrong. I'm not upset by anybody investing in the recovery plays. I invested a lot of money in the recovery plays. Millions of dollars in the recovery plays. I did put that all into tech, actually, though. So the last 6 weeks have definitely been a little rougher, but that's okay. I'm up more from had I stuck with my original plays in recovery. Bond traders now see growth, not inflation, as driver for yields. See, look at this. This is the weenie babies. They just redefine their concerns day after day. It's one day it's inflation. The next day, no, higher yields are a good thing. A burst of strong economic readings, a mammoth job creation figure Friday, and now a report from the ISM showing record growth in service industries is fueling bets that expectations for growth, not inflation, will dominate the narratives. That's an important distinction because while higher real rates, which strip out inflation, suggest investors see the economic rebound from the pandemic gaining steam, a persistent rise may hurt other assets, including stocks. Relatively risky assets could start to suffer with the market signaling that it sees growth getting so strong that it expects the Fed to start discussing a tapering of its asset purchases as a step towards tightening. I just don't see it. I hope you watched my video on at least not yet. I hope you watched my video. Well, certainly I hope you watched the interview yesterday with George. That was a really great interview. But I hope you watched my video. It's the new jobs data is wrong. Will the Fed raise rates faster? really good on kind of breaking down what's Jerome Powell, what's good old Jay Powell looking at. We got to know what Jay Powell's looking at. And when Jay Powell looks at the numbers, like when everybody else is like, oh, the jobs report was freaking awesome, like it says in this article, and you know, you got to look at it with the Jerome Powell mask on. And then when you put the Jerome Powell mask on, all of a sudden you go from really happy to being really sad. It's like, these job numbers just aren't that good. We're going to keep rates low. It's kind of what it feels like. Anyway, 10-year U.S. real, blah, blah, blah. All right, we've already seen the chart. We know. Yield trigger. Real yield rise set to fuel next leg higher in 10-year rate. Right, when inflation starts pushing it up. Okay, well, we'll see. We shall see. CPI data comes out in 9 days. Not that many of y'all actually care about the CPI data or believe it. But it can be a catalyst for the market. All right, speaking the market, how it sticks. Pretty much the same. I'd say there's been a little bit of an acceleration here. Yeah, BlackBerry into the close. We're kind of sticking around that 14% we've seen here. Voyager Digital, $29. We've been sitting around there. Oh, we had a little green candlestick here. That's cool. We've got, Tesla suffering into the close. We've got Shift, almost up 5%. Oh, these are pretty stable prices here. Yeah, I feel like Tattooed has literally been at like 1998 all day long. Okay. What else here? Gevo. Oh, Gevo just decelerated here. Look at this. Gevo falling a little bit more. My DeFi BlockFi got some raw yield. So BlockFi is not DeFi, but you can get some nice yield over at BlockFi. They're what do you call them? Like corporate centralized finance, CFI, centralized finance, but not government finance. I don't know. Jay Powell is looking at the Wall Street Journal, and all he is seeing is Meet Kevin. Yeah, well, thank you. I took, someone says, I took 10% plus in Tesla. I hate selling Tesla, but Tesla up on meeting demand and can't be over 700. Okay, somebody's got a theory on Tesla. Kevin's life is YouTube videos. Okay, well, thank you for the commentary. Supreme Court decision of Oracle versus Google. I don't know. I didn't hear about that. What was this? Is a new thing? Let's see. Oracle, Google, Supreme Court. I don't know. Let's take a look. Oh, all right. Supreme Court rules in Google's favor in copyright dispute over Android software. Supreme Court Monday sided with Google. I mean, these copyright disputes happen all the time. Trademark infringement kind of stuff. So sided with Google. Let's see, 6-2. Wow, that wasn't even close. The 1,200 lines of code that Google used to build Android that were copied from the Java application programming by Sun Microsystems, which Oracle acquired in 2010. Oh, so Oracle got suckered into inheriting that, it sounds like. Wow. Oracle had claimed at points to be owed as much as $9 billion, while Google claimed that its use of the code, oh wait, Google took it? Was used under, oh, Google took the stuff. Oh, I see. So Google took code covered by the doctrine of fair use and is therefore not subject to copyright liability. Wow, that's interesting. Fair use of somebody else's code. The Google's use of the code was protected under fair use, noting that Google took only what was needed to allow users to put their accrued talents to work in a new and transformative program. Wow, this is an interesting story that I don't think we can really cover here. This goes way deeper than this CNBC article. To the extent that Google used parts to create a new platform that could readily be used by programmers. That's interesting. So they're almost suggesting that like Google built Android on top of 1,200 lines or 12,000 lines of code from Sun Micro. Wow, that's an interesting case. I'd be interested in reading the opinions on those, just to see both sides of that argument. Anywho, Zom and Gevo just getting spanked, but look, so's Enphase. Jeez, man, back under 149 or 150 here. Let's zoom out to the day chart here. So going out to the day chart, we're really back in that December pricing and kind of just bobbing up and down here. So, all right, well, no problem. It will return Charge point. Etsy's down now a full 5%. Why? Etsy is still kicking butt. It's kind of like Peloton. Etsy and Peloton still kicking butt right now. It's incredible. GameStop planning we already talked about the $1 billion stock sale this morning. It's so incredible. Like when you look at the website analytics and you're like, oh my gosh, really? Etsy and Peloton still growing? That's incredible. So let's see. Smells like lobbying from Google. Oh, Kitty, no worries. Hey, you know what? Sometimes a good walk helps. Not saying you have to leave. I've just noticed that sometimes if it's just like things just aren't going right, you want to walk. Welcome from Amsterdam. Thanks for being here. Centralized DeFi. Oh, there's also centralized. That's like Unisocks, isn't it? Let's see here. Notice me. You've been noticed. Nicola, BlockFi, CFi. Yeah, okay, that's what we thought. CFi. What's wrong with fintech? Yeah, that's a good question. Fintech versus CFi. Anyway, we got the closing bell coming up in like 50 seconds. So let's see. ACTC, Proterra, the Tesla of the commercial world. Yeah, we should have them on the chart here. We'll just put them up. I don't mind doing a dive on them. I got to finish some of my other dives, but I'll put them up on the chart. Add to favorites here. We got the closing bell in about 30 seconds. So, yeah. All right, let's go listen to the closing bell. Wow, Voyager Digital up even more. Geez. Well, that's been a recent profitable one. I think my cost basis on that one's like 21, 22. I don't know what it is. Who cares? It doesn't matter.
Goldman Sachs and Chevron and Disney are the only drags. S&P 500 also heading for a record close, still above 4,000. Only sector lowers energy. Best performer, consumer discretionary, communication services, and technology. Each sector up 2% apiece. The NASDAQ up 1.7%, having a very strong day. Growth over value, but a lot of the sectors working. And small caps up 0.5%.
All right, ringing the bell at the New York Stock Exchange today is Wall Street Bound, celebrating the organization's mission to recruit and train 10,000 diverse youth for careers in finance by 20.
Yeah, whatever. Thank you for the bell sound effect. Okay. Oh, wait, here's the actual sound. Sarah, tell us what happened.
Welcome to the closing bell. I'm Scott Wapner in for Wilfred Frost today, along with Sarah Eisen and Mike Santoli, CNBC senior markets commentator. Sarah just told you how we finished up. New records for the Dow and the S&P. Pretty good day there, up 372 plus for the Dow. Rates holding steady, which meant that the NASDAQ was getting a decent boost. There's the S&P, though, up almost 1.5%. Not a record for the NASDAQ, but still 225 points higher. Very strong day. Coming up, the World Bank president, David Malpass, reacts to Treasury Secretary Janet Yellen's new push for a global minimum corporate tax. Nancy Tengler from Lafleur Tengler Investments is still with us. Greg Branch from Veritas Financial Group joins the conversation. Mike, first comment to you.
Yeah, I mean, look, it was a FANG-type day.
FANG-type day. Well, let's see. Let's take a peek. Okay, let's see how things ended up closing. I always love their sound effects there. One day they're just going to go through and demonetize all of that. It's like, you use their sound effect every day. Like, yeah, I did. But that's supportive. I think he's very supportive. Anyhow, so M's up at $61. Nice move up here. We've got the after hours just started, so it's too early to really start calling. Oh my gosh, I almost just spilled coffee. Too early to really start calling the after hour shots here. But Voyager Digital up 7.16%. Really incredible. Some nice tendies on that one. Love talking to the CEO of this one. This stock's almost up double since when I interviewed the CEO, which I've interviewed the CEO twice. Great guy. And I think really leading up to this Coinbase IPO, Voyager Digital is just going to look like the cheap stepchild compared to that pricing at Coinbase. But Coinbase is profitable. I mean, big fat money going into Coinbase. It's nuts. Tesla couldn't hold on to the 5%, couldn't keep it up. Sorry, Tesla. Delta, we got some of the airline. Okay, Delta, Bitcoin about 2.7. Hey, look, Bitcoin's back at $59,000. Tattooed couldn't get to 20. United Airlines is up 2.4%. Apple, wow, Apple coming out of nowhere. Apple's actually up. Apple is up 2.36%. I guess it maybe was a FANG kind of day, up at almost $126. These guys have like barely sold off. It's pretty incredible. Let's see. Somebody's got a theory here on that lawsuit. Let's see. It looks like you kind of three-parted it. Well, where's part one? Oh, here. Google didn't steal anything. Even I, at university in 2006, built apps in Java, which open sourced much of the code it already pre-built for enabling programmers to not code apps from scratch. So Sun Micro, what you're saying is Java was really here's just a language, or here's like the framework for you to be able to build your app on top of. Oh, I agree with that decision. That makes sense. Let's see here. Where was the second part? Java is still open source, and some code packages libraries are used now to build almost all enterprise applications. Google didn't steal anything. Even I, at university in 2006, built apps in Java, which was open source. Nice. Thank you for that insight. That explains a lot. I used Java for one semester in high school, like 2009. It's like, here, learn how to play Java. But all I did was tether my phone to my like 17-inch Toshiba laptop so I could play World of Warcraft in my class, which I was not supposed to do. But the LAN had blocked the WoW connection, so I'm like, fine, I'll just tether. The connection was really, really slow back then. What was it, Edge back then? I think they called it, before 3G. Anyway, it sounds old. Okay, so wow, Voyager went up to almost 7.5% here, even though it's technically not open in the after hours. It did sort of continue to sort of show its final pricing here, and it ticked up to 7.5%. That's incredible. It's gonna be over 30 soon. It's really that Coinbase that's pushing it. Hey, let's take it. Money in the bag, money in the bank. On the other hand, Enphase continues to give us opportunities to buy it lower. Not as low as some of the other days we've seen over here in the 130s, but love that company. So GoEV actually didn't end down as much as it was earlier in the day. It was down to 805. That's my area code. Ended up 847. We've got ChargePoint ended up down 5.8% despite being up a bunch early. Oh, hold on. Let's listen to this. The Fed
what
president.
happens in the economy. I like to point out to people who say, wow, the economy is really resilient. It had a lot of help from fiscal policy and from monetary policy. So I think that explains some of what's going on. And I think we need to be, very deliberately patient in our approach to monetary policy and really focus in on hitting those goals that we have for monetary policy.
Loretta Mester, president of the Cleveland Fed. Mike, I thought she was pretty dovish, actually, yep. As someone who doesn't always lean that way. Deliberately patient, despite almost $1 million.
She said very deliberately patient. That's pretty big. Very deliberately patient with monetary policy. Very. That's incredible. Okay. So, but that also reiterates what we've been hearing from the Fed. It's good to hear that from more of the other voting members as well. I think, is Loretta voting? I'm pretty sure she's a voting member. Let's see. Loretta Mester, voting member. Loretta Mester, she's an alternate voting member. Okay. Well, she's still got to say. Still got some power. Dow climbs 370 points at record close amid optimism. Mm-hmm. All right, so what else do we have here? Plug Power. How does Plug go down another 5%? I mean, this is crazy because Plug, I did my deep dive on Plug at 75, and I'm like, man, this stock's too expensive for me to buy it. I mentioned it could end up doing a quantum scape where it like falls 50%. The thing fell more than 50%. Like it's down more than 50% right now. That's crazy. That was a January analysis I did, which by the way, the analysis is still very relevant. If you're in Plug, I encourage you to watch it. It could help you build your thesis or challenge your thesis. I don't know. It depends which way you look at it. So what else do we have here? Let's go sort by the after hours. So after hours, we got CLII up 3%, Cannabis ETF up 1.1%, Workhorse up about 1%. Sundial actually was up earlier. Now it's down 2.3% or 2.7%. It is up about 1% in the after hours. ChargePoint trying to recover in the after hours. Gevo coming up 0.5%. Churchill was down 3.2% today. I thought they were green for a period of time. What happened? Oh, yeah, they were. I think. Did they just sell off into the close? No, maybe they were negative all day today. Yeah, maybe they were down like 1 to 2%. I just don't remember. But anyway, they definitely sold off into the close here. Classic Lucid. It's once you get out of peak media, share price go bye-bye. But that'll come back. So Kappa 2.49%, Arcturus down 2%, Twilio, good company by the way, really good. Back end basically set up for all the spam text messages you get. Thank Twilio. Probably actually. Not trying to associate them with spam because I like them, but anywho. So what else do we have here? Lemonade almost under $90 again. Beyond Meat. Okay, yeah, I mean nothing really major happening here in the after hours. Let's take a peek into what they're saying here, what their commentary is on the Fed.
Around the consumer is dulled a little bit in terms of spending, and that will obviously impact margins. Labor slack will help, but we are watching all of these things that have sort of factored into our bullish view in the previous months.
So I characterized your view right, Nancy. Did I in saying that you think we're in a sweet spot right now for stocks?
You did, Scott, and our caveat to that is that we're going to hedge away some of the risk because, we did that last February. It was dumb luck, but it helped our clients immensely and it kept us clear-eyed. So we want to keep the hedge in place because we do think that I think Greg might be right that the market's underestimating even the inflation side of things, and therefore we'll get more volatility as inflation spikes.
This is literally, so she's speaking on behalf of the suits here. This is literally what we keep hearing. As well, we may as well keep these hedge positions because there'll be more inflation.
Thanks for joining us as well from Veritas. We appreciate it. Up next, Morgan Stanley Chief U.S. Equity Strategist Mike Wilson on today's rally and the sector he thinks that is ready to break out. And later, World Bank President David Malpass on whether Treasury Secretary Janet Yellen's call for a global minimum corporate tax will become a reality. We're back in just 90 seconds.
All right, let's pop on over. I did see the hit piece on GoEV, the short sellers. Gotta love them. Okay, what do we got over here? Let's listen to this.
I hope the administration thinks about this differently.
Even House Member DeFazio, longtime expert, chairman of the committee, has criticized this gigantic tax increase. He said we don't have to do it that way. What's wrong with toll roads? What tolls are the ultimate user fees? I like the public-private partnership a lot, Roy. I think that's good stuff. And look, what's wrong with bonding? We've used bonding for forever and forever and forever. I'm not talking about the federal government. I think the states, even the localities, can sell bonds. These are
Larry. Have everybody raise bonds. All right. Bonds, Larry.
Over the past couple of weeks, every time we saw that 10-year sort of start to creep back up above 1.7, get closer to 1.8, then all of a sudden you saw the dump come in equities. Are we going to see that this time around again?
Well, we did have that really big scare back in February, but if you remember back then, what that was all about was that rate of change. The yield in 10-year treasuries was just rising so very quickly. We are not seeing that as much.
How many times did I say that? It was the acceleration, the rate of change of the rate going up. So, which is the first derivative, the acceleration. Perfect.
So stock market is
now the suits are saying it.
As the economy rebounds, as you see some of those really strong data points coming in. And so it's not so much that they're rising, it's that they're rising for the right reasons. And of course, the question for a lot of investors is there a threshold where bonds may become more attractive than stocks? My colleague Katie Greifeld and I actually looked into this over the weekend, and just speaking with people, investors were saying, yes, the relative attractiveness of bonds has been improving recently, but real rates continue to be negative. And so in that environment, stocks should be able to maintain their appeal relative to bonds.
Valdana, Katie, living the dream and working on the weekend. And of course, we've got to remind ourselves it was a long weekend and we've actually got pretty thin volumes today. They were off by about 20% compared to your usual. But talk to us about the breadth, because we saw not just the cyclicals perform well, but big tech too. Is that what you need to see for some sort of healthy sustaining of this rally?
That is something that you're hearing quite a bit recently, where you're having just much greater participation. So if you are looking, for instance, at the equal cap weighted versus the market cap weighted S&P 500, the equal cap actually is having its best year relative to just the classic market cap weighted S&P 500 in more than a decade. It's besting it by more than 4 percentage points. And something really similar is playing out in the small cap universe as well, where the equal weight index of those smaller companies is beating the Russell 2000 by nearly 6 percentage points this year. And so what to a lot of people, what that's showing is it's just much broader participation. Today, you did have tech outperforming. You know, some of that could be from some of the good news you're getting from stock-specific.
Okay, I'm going to pause there for a moment and just say, yeah, I mean, in other words, what this particular analyst here from Bloomberg or journalist from Bloomberg News is saying is, hey, look, as the recovery stocks continue to recover, and as maybe some of the other cyclical stocks or whatever, industrial stocks, as they recover, eventually they've got to pull tech back up as well. Because, you know, one of the things we've been mentioning, especially when we had our bigger dips earlier this month, sort of towards the end of February, is at some point tech becomes relatively cheap compared to everything else. And it kind of makes sense to go, well, wait a minute, now tech's pretty cheap. Let's go buy that because we got some serious long-term earnings potential there.
On like a light switch. Normally a recovery happens gradually as employees are hired back as business improves. But because of this one-time event of kind of reopening the economy, it's going to happen more quickly. And so that kind of, you know, tells us that it's time to move into the mid-cycle area.
Your staples call is interesting because a lot of people hate staples, which may be very appealing to you. But one reason they hate them right now, Mike, is that interest rates are going up, yields are rising, and that typically is not attractive for staples, which pay high dividends, which are a low yield alternative. So do you think that represents a threat?
Yeah, but that threat has been taken out to some degree. So first of all, just to be clear, we are neutral on staples. We went from underweight to neutral. We've been underweight staples because of what you just said. We expected rates to move up. Beginning of the year, we were very out of consensus on where we thought rates would go. But that adjustment has happened now. We think there's more to go, but the market can no longer ignore rates. And they, you know,
this is important.
Stocks. Right, interest rate sensitive stocks have been punished. Right, high multiple growth stocks have been punished. We think there's some more risk there for the really expensive areas. But generally speaking, the rate shock is no longer a shock anymore. It's a known at this point. Now it's just the pace and the direction and how fast we get there.
So what?
Yep. Look at this. We literally heard that at Bloomberg. Now we're hearing it at CNBC. I'm telling you, folks, these suits, they are slow. They're so slow. It's like while the crash was happening, we're like, folks, once everybody realizes the whoa of the car accelerating really fast is over, and people are like, okay, we're just driving a little faster in the car now, there'd be less pain in the markets. And that's kind of what we've been seeing, albeit a little bit slower. You know, we're not seeing that kind of insane recovery where it's like 10%, 10%, 10%. But again, you know, as we've talked about on the channel, we like that. We don't, I mean, if you own stocks, obviously you want 10, 10, 10, 10, right? But it's also not very sustainable. So this is good. Let's keep treading in the right direction. I like it. Let's keep listening.
Concerned one bit.
Yeah, I expect it to. That's been core to our call for the last 12 months. And we think inflation is going to surprise on the upside. It's probably not going to be as transient, perhaps, as the Fed thinks or as maybe investors think. And we think the risk in the near term, most people think, oh, higher inflation, that means prices are going up. We actually think the risk in the near term, Scott, is more in margins. We're hearing a lot of evidence that suggests that, supply shortages are everywhere. Inventories are record low. Now that's potentially good for orders, but if the supply isn't there, okay, and then prices go up for those goods or services, it's not clear to me they can pass that on for the next 2 quarters. So we actually think the risk for inflation in the near term is margin pressure. One of the reasons why we think the index is going to.
Yep. In other words, and we've talked about this many times in videos, is as supplies get constrained, I've mentioned this on the channel, companies are oftentimes reluctant to raise prices because it incentivizes more competition and it makes them less competitive. So a lot of companies just eat it in the profit margin. Not all, there's certainly industries that will raise prices on you. China will raise prices on you in certain industries. But this is true. And this is something that might keep inflation actually lower is when prices don't go up. Like he said, We're not sure we're going to see those sustained issues for multiple months in a row, 2 quarters in a row, he said.
And I agree with the Fed statements. We probably won't stay at those levels, but the idea that we're going to go right back below 2%, like I think some people are thinking next year, we disagree with that. We think there'll be more persistent inflation. They'll achieve their goals sooner. They probably will be raising rates, sooner.
So it's interesting. He's kind of got both angles here, which is kind of a unique person because usually we got somebody like no inflation or all inflation. He's kind of got both. He's saying, look, temporarily margins are going to get hit because of these supply chain shortages, but it's possible we do think, like he just said, that the Fed's going to raise rates sooner. That's also a very common belief on Wall Street. Even Kathy at ARK Invest thinks that's true.
Middle of that right now. So once again, the index level, not that exciting. But there's a lot of good stuff going on under the surface, and we're trying to capture that.
Let us know if you have to change it, okay? We'll talk to you soon.
See you later.
All right, that's Mike Wilson from Morgan
On this
Stanley.
show, not the other show.
Not
right?
The one at noon.
Right. He does both.
Yes, he does.
Yeah.
All right, up next, Mike Santoli digs into a new asset allocation strategy and why it could mean stocks have a lot more room to run. Plus, World Bank President David Malpass on how increasing vaccination rates are impacting the global economic recovery. Looking forward to that interview as well.
If you're looking,
that's a good line here. Lulu Minotaur. EV producers struggle to retain supply chain. Tesla, on the other hand, delivers 185,000 electric vehicles troll of the year. Good call. All right, so what else do we have here? We'll go back to the sticks in a moment too. All right, so okay, let's guess. What's Kudlow talking about?
17 was a $1.7 trillion reduction in revenues. That's not true. The point is that our growth increased, our jobs increased, real wages increased, and taxes. The growth in tax revenues in the 2 years following that tax bill and preceding it was up, not down. Mm-hmm. Every one of us got this all mixed up. And Chris, of all the wonderful people, and I really do love him dearly, I think he does a great job, didn't understand that the reason you cut tax rates is to get economic growth, and that growth offsets in part those tax revenue losses. And in the case of the Tax Cuts and Jobs Act, it more than offset it.
Corporate tax paid for itself by the end of 2018.
Wow, the anger over here. All right, I think we're on commercial everywhere, so let's go to the sticks. We shall go to the. Oh, you know what we could also do is let's quickly look at the top news. So, top news. Oh, that's interesting. Ooh, that could be an interesting topic to dive into a little deeper. This is kind of what I was talking. That's so crazy, folks. Come on. This was posted 20 minutes ago, okay? 23 minutes ago. And what was it? Let's go to YouTube. Meet Kevin, hedge fund. This one right here, right? Okay. So 2 hours ago, I posted the hedge fund double Uno reverse hurting the stock market. Watch that. Really, really, really important that you watch that. Okay, watch that because I talked about it 2 hours ago in terms of my suspicion of what's going on in the marketplace. And what do we got here? Sees another Archegos-style blow up as highly likely. This is literally the topic that I had in that video. Not exactly like that there would be another Archegos style blow up, but that I just watched the video. It's really incredible. But anyway, well, let's read this here. So it says it's only a matter of time before another firm implodes in a manner similar to Bill Hwang's Archegos Capital Management. It's highly likely that we are going to have another situation like that. Major losses, such as those incurred by Archegos, tend to continue to cascade until the market corrects and flushes the risk out of the system. Yep, totally believe that. That's an incredible news story right here. I like that one. Not that I want to see that happen, but that's kind of what I was warning of 2 hours ago. Anyway, maybe they saw my video. Who knows? Crypto market cap doubles past $2 trillion in 2 months surge. Wow. So total crypto market cap. Biden team, private equity, Fedmaster. We saw that. Yield scare that shocked stocks in February barely registers now. Yeah. See, people get used to this. They like, you get used to, okay, rates went up. Oh, freaking K. You're going to stop investing in the stock market? You darn weenie baby. fun baby whatevers. It's stupid. It's stupid. All right. What do we got over here?
If you look at the Bank of America flow show, Mike, which we all, pay attention to, there's like record outflows of tech for the last 2 weeks. And part of me wonders if that's like a contrarian indicator.
Right. On a short-term basis, it most certainly is. It does tell you, by the way, tech is starting to kind of get some traction again in the market. So I would say sector-wise, that's probably true. What's more interesting, though, is if you look at the Global Fund Manager Survey, they had extremely high equity allocations, too, and very low cash allocations. So I think pretty consistently across the board. I don't think everybody is all in, but I do think that largely people are exposed. This has been a year when it almost forced people to kind of raise their stakes in equities, and they have.
Mike, thank you. Mike Santoli. Treasury Secretary Janet Yellen today calling for a global minimum tax rate. Up next, World Bank President David Malpass on whether that would eliminate tax incentives for companies to relocate around the world. Plus, the CEO of diagnostics company Quidel on whether demand for COVID testing will start to decline as more people get vaccinated here. We'll be right back.
Man, I got to get music like that. Okay, so let's see what else here. Bloomberg should be back. Let's go back to Bloomberg for a moment. See if there's I love listening to these just to see what we can comment on. What are they saying over here? Get an idea what these suits and the weenie babies are thinking.
Consumer awareness and options, and allows the studios to continue experimenting with all of these titles. But the big budget films, the 200 plus $1 million movies like Godzilla are always going to be, I think the bias are always going to be to release them in the theaters, whether it's on a day and date basis with the streaming windows or back to a much shorter theatrical window that will be then followed by the premium video on demand on other digital outlets.
All right, Tuna, so great to catch up with you. Tuna Amobi, of course, analyst over at CFRA. All right, and while he was talking, we did get some breaking news crossing the wire here. This on Credit Suisse and, of course, the fallout from the Archegos Capital fiasco here. We're learning that the investment bank chief over at Credit Suisse, Brian Chin, is set to leave the firm. This is part of a broader shakeup that is occurring there because of what happened with Archegos Capital and Credit Suisse's involvement there. We should point out this is a Bloomberg story citing people familiar with the situation. So, again, anonymous sources citing this, but we've talked and we've had a lot of reporting on the Bloomberg terminal, Caroline, over the last few hours here about several names that could potentially be on the block here because of the fallout from this scandal, Caroline.
Yeah, more fallout from that. Take a look at this, folks. I want to, it's not plugged in. I want to run this regarding AMC. So I want to do a poll, and I'm hoping you can join me. So go to @RealMeatKevin on Twitter and take a look at this poll I'm running. Let me know what y'all think. Well, that does no good. There we go. So will you go back to movie theaters? Absolutely can't wait. Yes, but much less. Nope. Watching from home. You know, we should put another one in here. Watching from home. Yes, but somewhat less. There we go. Okay, those are 4 reasonable options, right? And then wait, we should put hashtag AMC. Yeah. No, $ AMC. Okay, cool. Let me know what you think. I posted it. Stop hiding. I know. I got to stop going over there. Or at least, like, if I lean over here, I should, like, change the angle. All right. So let's find out what's going on in the after hours. We haven't looked at the sticks in a little bit, so let's do that. The sticks should be nice and settled now. And remember, that's Real Meat Kevin on Twitter. So check that out. Okay, so the sticks should be settled now. So we've got 1% on Newell, Gevo, Sundial, ChargePoint, Workhorse, Matterport 0.75%, Churchill Capital 0.5%, Invitae 0.6, Lemonade 0.5, EXPI around 0.5, Pinterest is almost over $80 again. Let's go. Gosh, thing up like crazy under $70. I'm like, I just gotta have more Pinterest under $70. I love it. I love me some Pinterest under 70. It's bad. To tell you, it's an addiction. Like I gotta buy more stocks. I just like start twitching. Like I must buy. Although lately, what I've been doing, I think I mentioned this. Yeah. Well, this is a video going viral of Spirit Airlines kicking a 2-year-old off a plane for not wearing a mask. I can't even get my 3-year-old to remotely consider wearing a mask. And he's like 3.5. Kids under 5, maybe 4. Tough. They got, oh, man. Anyway, oops. Anyway, where were we? I don't know where we were. At Real Me Kevin for my post. Yes. Okay, so anywho, I don't remember what I was saying, but I'll just keep going here. Peloton, 0.61 down again. No problem. Be another opportunity. Oh, Canoe also going a little red in the after hours here. I'm tempted to pick up a little more. Oh, I was talking about, I was going to say that I've purposefully, I'm paying down my margin. I think I've mentioned this before on JP Morgan because I've paid my margin off over there. It's very slow for me to be able to pull it out again. Like I can't just swipe up. I have to request the transfer and then it takes like 3 days to get it. And that slowness is like great. So like if you're trying to go into like margin anonymous, that's a good way to do it is find a way to delay how quickly you can put your margin into stocks if you're outstanding a margin. You know, see margins, you can get margin calls. Something that we just started, we've been talking about. But I posted some really neat lectures on implied volatility in the Stocks and Psychology Money course. Really, really awesome. Some charts and some really cool insights. But anyway, one of the things to talk about is how you can't get margin called on options, but options go to zero like really freaking fast sometimes. So it's an interesting alternate form of balancing your leverage. Okay, so everything else is kind of in the middle here. What did GameStop do today? GME, let's see. GME, enter. GameStop was down 2.3% today and pretty much flat in the after hours here. But good job on Bitcoin getting to that 59, but it is having so much trouble staying above 59, Taya. All right, what do we got here? World Bank. Okay, yeah, hey, more vaccines. That helps people. Big deal. Okay, I mean, it is a big deal. I get it. But I don't think it's something we need to cover right now. Instead, I got to go. Thank you so much for being here. Get yourself that free $250 by signing up for BlockFi. Go to metkevin.com/BF. Get up to $250 totally for free by signing up. You get paid interest on your deposits or your cryptocurrency and of course, check out the amazing programs linked down below. And folks, see you in the next one. Bye. Oh, and go vote on Twitter.